Da, 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 da. Ah, ah. Oh, guys, my doorbell. I'll be back in 2 minutes. I have to grab food. Opa! We're back. We're back. Hope everyone is doing good, feeling great. It's a Friday. And, man, I just ran up the stairs. I'm out of breath. Give me a sec. I ordered, it's like from this website called Muscle Meat. It's all these frozen meals and already like, kind of like meal prep stuff, you know? So I'm excited to have that in the house. Road to getting absolutely shredded for summer continues. When I need to cook myself, you always end up snacking around, you know what I mean? When I have the meal already there, I just need to eat it. But I hope all of you guys are doing good. And the fact that you guys are all tuning in on the Friday PM session already tells me enough about your character and that you're an absolute fucking G. Okay? So we're going to dive into Bitcoin first to kind of build a bias and the overall expectation that I also elaborate on today during the private streams, and then with some setups that we were looking at, and then kind of the expectations going forward. Okay, so we got this aggressive move down, and super aggressive move yesterday. That's when we hit our take profit, final take profit on Bitcoin. Let's grab at 10. Oh man, we hit that TP exactly on we hit that TP exactly on yesterday's opening. So right here, right, you had the distribution short from there. We had the sell side liquidity target from some time. That was our bias. And then we aggressively dropped down into that sell side liquidity target where the final take profit was. And basically ever since, we have just gotten this move up. Okay? Now, I can tell you from experience that after having a major sell side liquidity target below, and you get that initial deviation and just one low followed by a move back up, oftentimes this is what you call a liquidation bounce, somewhat of a relief rally before price eventually makes its way back down to that low again. Okay, these lows are not particularly that sustainable because it's literally just one individual low followed by a very slow move up. And oftentimes when you get these aggressive drops, the reason why it's an aggressive drop is because lots of stop losses and liquidations are getting triggered, and that can cause some kind of a local reversal, because liquidations are the first signs of a reversal, because the market searches for these pools of liquidity, grabs it, and then reverses, and then depending on what the higher time frame objective is, we either get like a full reversal or a continuation towards the downside. And looking at this just from purely a market structure standpoint so far, obviously we have the range high deviation, and this low right here, the highest time frame that that specific low is valid on is the 12 hour, because only on the 12 hour or lower can you draw that 2 candle pullback followed by that 2 candle expansion. So that is your 12-hour low. If you go to the 18, it's only one candle down, so no valid market structure right there. So it's a 12-hour low, which so far got SFP'd, but our market structure from top to bottom is still trending down, making lower highs and lower lows. And when we combine that knowledge with the idea that oftentimes when you get that aggressive liquidation and you get that individual low put in, especially if the news or if price got dumped partially because of news, obviously market makers are pre-planning and pre-positioning themselves to benefit off of this move. But if the eventual order flow objective of the move gets accelerated through news with Elon Musk and Trump beefing online, you can expect some sort of a local reversal after, before a consolidation followed by a distribution, because what price likes to do is simply rebalance and finds the equilibrium again. So let's say price was intended to go down slowly from here all the way down to here, maybe not super slow, but just in the normal fashion. News will accelerate this process, kind of causing an imbalancy and an inefficiency because the news accelerated the move down. And then price simply reverses, finds its kind of like rebalancing point, consolidates, maybe distributes in here before continuing with the move towards the low. Even if it's intended to go higher in the end, you preferably want to grab these individual lows because you want to create some sort of a higher time frame accumulation model, mitigate some higher time frame demand before getting an actual reversal back up. And we know SFPs can be temporary. Only when you break structure back to bullish after an SFP can you be talking about a reversal back up. So we have that 12-hour low from following the market structure from bottom to top. So let's consider that our primary market structure. Let's call it level 1 market structure. Our level 2 market structure is from top to bottom. So it's a different pool, okay, which is these lower highs and lower lows. So just by identifying your market structure, right, you can only really get bullish if you start to break that market structure high. Then I would expect a reversal back up to a new all-time high. And if you break your market structure from this bottom to that top back to bearish, you can simply continue with this downtrend because you still got levels. If I can grab it right here, you still got levels lower to hit as well with these high time frame demand mitigations. So the bias for me on Bitcoin was more so that literally this morning I said I'm expecting this to be a relief bounce, which can go a bit higher initially also on your altcoins. I had this POI right there, which was basically a 45-minute order block, an OBIF right there, that if you zoom in on a lower time frame, you can see that on a lower time frame, that order block got already mitigated right there on the 1 minute. You can see here at the low of the 45-minute block, you can see it already got mitigated, and you left this this tiny little structure supply POI, and where your low time frame structure is overlapping your high time frame structure supply. That is where you have that true inefficiency, and that's where you get that true reaction when they're overlapping. So kind of like in this region, this is a little secret tip right here for you guys. In this region, that's where you can expect that true rejection. If I just make it white like this, in that overlapping region where you have the lower time frame supply overlapping the higher time frame supply, highlighted right there, that's where you can oftentimes get the true rejections, because it's like more of an, I would call it an algorithmic rejection, just algos filling these imbalances and reacting off of it. So what I was kind of expecting is, okay, we got this order flow objective getting hit, sweeping all that sell side liquidity. Let's get some sort of a relief move up. Find our resistance POI, maybe consolidate over the weekend somewhere in here. Find our consolidation. Let's say we have this range over the weekend. Kind of find our consolidation. I don't know what that range will look like because it's not here yet, but find our consolidation. That could maybe end up being some sort of a distribution model. Let's say you're ranging here and you're building up and you're taking that high and you have the 1, you have the 2, and then later on you come back for the 3. Not really that good drawn from a time perspective because this is only like Sunday morning. But then kind of have your range over the weekend that either, Sunday or Monday or Tuesday ends up confirming some sort of a distribution to eventually make its way back down to this low, where then we can look at this as maybe some sort of a market structure continuation right here, making a lower high for a lower low, which then can be considered our, I think it's PS in Wyckoff terms, our PS before diving into a higher time frame consolidation and range in here that can end up being some sort of an accumulation. I don't know where exactly this will be, but let's assume it's somewhere in here. Maybe we can get this as our PS because it already swept a lot of sell side liquidity, but it's just too V-shapery to be considered a starting point of the range. Would also be too fast. Oftentimes after that first aggressive drop, you get a market structure continuation followed by a range and not immediately a range creation, and then kind of get your high probability accumulation model in here. Let's say you get something like this. And this is just an example, okay? Don't take this literal. I'm just talking about a market structure continuation towards the downside, followed by an overall accumulation, which can have many different variables on how it wants to develop. And then when you're doing this, what you kind of should start to notice is that every single lower high right here, or just high, and which is followed by a lower high. So we got a high right there, we got a lower high right there, and we got a lower high right there. Every single lower high has mitigated the extreme demand of the extreme supply, of the previous high. So we got an all-time high right here that has its own distribution model. And then this high came back for the extreme supply of the previous high. And this high came back for the extreme supply of the previous high. So you're mitigating all supply, aka now you're just leaving highs above, where the order flow objective of these highs has already been fulfilled if you confirm an accumulation, because that was to sweep liquidity and accumulate, mitigating high time frame demand. So you should already start to kind of like get the hint. What I'm pointing towards is that if you get something like this, and because all the supply at the highs have been mitigated, these lower highs simply turn into liquidity, and now you're sweeping all that sell side liquidity below. You're showcasing signs of exhaustion coming down, where you have a lower low right there, lower low right there, lower low right there, lower low right there. You're taking the lows, leaving the highs above. You're changing the liquidity atmosphere again, where here you were taking the highs, leaving the lows. Now you're taking the lows, leaving the highs. And then on that accumulation model in here, you can then get a reversal back up for a potential higher time frame macro third tap, where a model 1 seems more likely because you already mitigated all the supply. So then I would extend that range high to the deviation high right here, extend that range high to the deviation high, and then this can be way more stretched out. So let's say this can also like last until like this region. I don't know exactly what the timing will be, especially because we're diving and heading into summer as well. So this could literally be stretched out over this time span as well. But if you get the accumulation confirmations in here, it could also even go a bit deeper. Maybe it wants to build that trendline liquidity kind of like from here, to kind of build these lows up as well. The price then later on can come back for. And then you can get a move up sweeping all that buy side liquidity, where we will be looking for high time frame third taps as another deviation of that high, where then you have a high time frame 1, high time frame 2, high time frame 3. Maybe you get TCT and TCT, where in this POI right here you get your own little range, TCT and TCT, model 1 distribution. Now you're taking all buy side liquidity again, you're getting your distribution signals, you're leaving maybe sell side liquidity on that move up below. You have at least these lows lining up, and then you can get the reversal back down all the way to the range low. Now, don't tell me like, oh, this needs to be in July. I don't know the timing. It really depends on what the market offers us. You just don't want your tab 3 to be longer in time displacement than your tab 1 and tab 2. So the distance between tab 1 and tab 2 is 122 days. So kind of measure that to the right. You can see you have a lot of flexibility where now it's only 70 days. But what this really reminds me of, now that I'm talking about it and now that I'm kind of seeing this happening in front of my eyes, it really reminds me actually of Solana. Yeah, it really reminds me of Solana. So let me grab Sol real quick. When we nailed the all-time high actually on Sol. So let me save this TA. It really reminds me of this price behavior in this region right here. So what happened here is this. So you had your high time frame demand, okay? You had your high time frame demand right there, and that is what price mitigated, okay? But the way we approach that demand, you can see the liquidity change. So this right here on the left, this was, I think, an all-time high, no? Let me fact check myself real quick. Yeah. So on this high, you grab the all-time high. So it's actually very scary similar. It's very scary. It just popped in my head. So this is an all-time high right here. The exact same way it is on Bitcoin right now. That's an all-time high. That high right there. What we did is while we were pulling back or pulling up into that all-time high, you were leaving all these liquidity lows below. So I'm not going to explain exactly why this is like kind of like the extreme liquidity of the move, but you're rebuilding. Basically, you had the initial expansion right here, right? You had the initial expansion. And then from there, you're seeing all these lows stack up. Not really leaving fair value gaps, but you're seeing all these lows. You got some demand in here, but then again, you're leaving these equal lows here, and then you get the move up. So you're leaving sell side liquidity below, which was even more obvious on Bitcoin, and you're diving into that all-time high. Okay, you get your distribution model, you sell off, but the way that you're selling off is actually pretty bullish because you're sweeping the lows, you're sweeping the lows, you're sweeping the lows, and you can go on my profile. I literally talked about the swing long from down here. I literally talked about this swing long down there. I traded that swing long on spot. So you were sweeping the lows over and over again while leaving the highs intact right here. You can see at this point we were curling down. I was looking for swing longs in this range formation. But then you can see you get that range formation. So you're putting a new all-time high. You're sweeping all this sell-side liquidity. In the process of sweeping all sell-side liquidity, you're leaving now buy-side liquidity above. Price accumulates, rotates back up the buy-side, sweeps it. Sweeps it just to create a macro third tap and then to sell off again, where this ended up being your high time frame 1, 2, and 3, which we also shared in advanced. So it was kind of getting that last bullish play into your high time frame third tap before this thing just absolutely nuked. Still upset that I missed that low time frame scalp right there. But that's kind of what I'm pointing towards. So you have your 1, you have your 2, you have your 3, and in the second tap right there, you're sweeping all sell side, leaving buy side above, accumulating, where the purpose of this accumulation is to push up, to take that high once more, to then eventually sell off. So we can see we have the starting point of the range, we have the move back up, we can see in that second tap right here, we're leaving all this sell side liquidity below, we're slowly grinding down, leaving buy side liquidity above, we get the accumulation, push up into your third tap to then sell off again. I'm telling you, if this develops like this, we're going to be nailing the exact all-time high on Bitcoin. Because I've seen this too many times on every time frame. It's the same on every time frame. Now it's just the high time frame, so you have extra time. So if you really want my steps and my thought process in advance, it will be something like this. And then from a timing perspective, it can just be stretched out. Okay? It can simply be stretched out. And locally, I'm expecting here, if I have to clean this up. If I have to clean this up again. Locally speaking, we swept this liquidity. This move down was caused by also external news, which accelerated the move down. Price rebalanced, I'm expecting some overall consolidation maybe over the weekend with the overall purpose of coming back down to this low to then eventually start some sort of an accumulation model down here that then pushes price up to new all-time highs, deviates the all-time high, and then we find shorts in that deviation area, okay? Because I'm not going to be publicly live streaming every day next week, so I'm just giving you this playbook in advance. So note it down for yourself. Be prepared for it. I'll keep you guys on my X updated, but that's kind of my overall idea. Now, for the people asking what's the demand below, it is this high time frame demand right there on the daily, high time frame demand, but it's just dissected into lower time frame demand overlapping higher time frame demand. So you have overlapping lower time frame demand at the upper section and the lower section. So they're just two individual blocks, but I'm only highlighting the blocks right here because they're backed by a higher time frame block. So that's kind of been my expectation on Bitcoin, and we're currently getting the rejection from that POI. So we might go back up again to kind of start some sort of a range. But that's my expectation, okay? This being a liquidation bounce, and we will eventually revisit this low. The invalidation for that, okay? The invalidation for that is a break of this market structure high. Because I told you guys in the previous live stream that if you want to be bullish, that this was back when we were here in the beginning of the week. If you want to be bullish and you want to have some extra aggressive expansion towards the upside, then you want to sweep this liquidity because this liquidity fuels the reversal back up. So if you start to break that market structure from top to bottom like we just discussed, if you have watched lecture 1 of the TCT mentorship, you would know if you SFP a low and you break structure back to bullish, you can get a rotation all the way back up to this high right here. Okay, so the invalidation for the idea of revisiting this low will be to break that market structure high. If you can get high time frame closes above that high, and with high time frame, I mean the highest time frame that market structure high is valid on, which is, it's daily. Yeah, so daily, if you can get high time frame daily closes with some decent price displacement above this market structure high, then I would already expect an overall rotation back up to a new all-time high. Okay, so that's kind of the invalidation of that play of going lower, and that's basically all that you need to know for Bitcoin. And then you can build your altcoin thesis around Bitcoin. So, for example, I was expecting Bitcoin to come up, hit resistance, consolidate, to then eventually go lower. So Farcoin today had the highest probability of giving us an entry, where what we got yesterday, Farcoin actually had some more unique price action because it got a Coinbase listing, I believe. You can correct me if I'm wrong, but right there on this pump candle, we had a Coinbase listing. So while all the other pairs were going down with Bitcoin, and we're currently also rebalancing back towards the upside with Bitcoin's current expansion towards the upside of today, you had Farcoin already creating a high probability ranging environment where you had the range formation ever since the after hours, with price nicely curling up right here, creating a high probability range with a beautiful return to zone. And not only that, this was not just our 1 hour market structure high. So you can see right here, we get the distribution model, we get the aggressive sell-off, and this is that lower high for the lower low on the 1 hour. It's also a beautiful liquidity target because you can see these triple highs. So on a macro time frame, I'm potentially expecting Farcoin to go down to 0.68. And we bounced of the only POI that is protecting price from actually going towards that target. So we can see the exhaustion coming up here. Price is making higher lows and higher highs. We're taking the highs, we're leaving the lows. In other words, we're taking buy-side liquidity, leaving sell-side liquidity below. You can see this curve right here. From this low to that low, you're building up all these lows. The only demand in this period of building up these lows is the demand that I currently have highlighted on the chart right there, which I think it was like a 2 hour order block. Yeah, you can see 2-hour order block right there. Okay, 2-hour OBIF. So we got this aggressive sell-off. We got a daily bearish breaker structure right here. Okay. We got a daily bearish breaker structure, which followed, or what followed was a lower high for a lower low. And the lower high was caused by a distribution model. So my high time frame expectations is that price could potentially make its way back down to here. And then we get a Coinbase listing, where prior to that Coinbase listing, we mitigate the only demand that is there that can hold price up and can protect price from going to this low. So we mitigate the last, see this as the last soldier standing, okay? This is the last soldier that can beat your army. That soldier has now fallen. If there's one more enemy that pushes price down to that soldier, he's gone. So the last soldier is dying. You're building up sell side liquidity. You're taking buy side liquidity. This is a super high probability environment, okay? This is a super high probability environment for a short. So contextually speaking, we're sweeping buy side, we're leaving sell side, we have even more sell side below, and we got a pump into buy side through a Coinbase listing, which is the ultimate trap. Right? That's the ultimate trap. If you have news that pushes price up into buy side liquidity and you have sell side liquidity below, man, that makes for the best shorts. Okay, that makes for the best shorts. So I was watching this range very closely, but unfortunately what happened is like technically speaking, right? Price came up and you deviated this high right here. You got the 2-candle pullback, you got the 2-candle expansion, and you also have a high probability return to zone. So technically speaking, you could kind of look at this as a Model 1 distribution that has a bearish breaker structure right here. So anyone that has watched the lecture 5 of the TCT mentorship, you would understand that you can take this trade. Now, I was personally also in the gym when this trade happened, but if you check where that breaker structure is, this is a 2-minute low. So this breaker structure right here is all the way down to here. Like if you want to enter on that break and you have to put your stop loss there, it's only a 1.4 RR towards the technical target, which is not the best, right? So I'm coming back and I'm seeing price here curl up right there. I'm seeing this curling up with these lows getting left behind. So I'm looking at this and I identify that, hey, this range is also valid on the 45-minute just by following your structure moves, making higher lows and higher highs. And then your second and your third tap completely disappear. So this could be a situation where on the lower time frame you have a Model 1, that on the higher time frame is simply a Model 2. So on the lower time frame you're going to have a 1, a 2, and a 3, and then an extended tab right here, a Model 1 going over into a Model 2, which on a higher time frame will simply be a normal Model 2, which is that combination of lower time frame extended distribution, higher time frame normal distribution, which is what we talked about on how we longed the exact bottom on SUI, how you could have shorted the all-time high on Bitcoin. If you really pay attention to the information that I provide in my YouTube videos and that I talk about on a daily basis, it's the same repeating patterns over and over again. So I saw this extreme supply, which is basically just 2-minute structure supply. And I'm like, oh man, if we can get a pullback on New York OPA into here, followed by a bearish breaker structure, that's going to be the easiest short. Like it's the easiest short. That's what we pre-planned inside of the VIP Discord. But unfortunately, we never got that pullback and we already rotated to immediate sell side liquidity, you know? So the pre-planning was there. Everything was there. I just didn't get the desired pullback, which is definitely unfortunate because I want you guys to understand that I literally said this on stream as well today. If you get a breaker structure that could simply get like a 0.5 stop, like if you get something like this and you can put your stop loss there, that's a 0.7% stop loss. Guys, you could literally potentially target all the way down to here for 50 RR. you would simply de-risk the position down here and then leave it run for down here. That's what I would do. And then if we get some sort of a pullback, I would just simply look to trill the stop loss if we get a lower high for a lower low, and I'll trill it here into profits. Where maybe, you know, I would say if I hit a first TP, it will be down there because this is the only demand in between this sell side liquidity low and that sell side liquidity low. And then simply put your stop to entry and let the trade do its thing, you know. But this was a potential crazy setup. I just didn't get the desired retest right there on New York Open, which is a shame. It's like, it's unfortunate, but man, it could have been insane. And these setups do present themselves, guys, right? But you need to be aware of them. You need to understand that the order flow objective of why price could actually get that move down. I'm not your favorite influencer telling you that this thing is gonna go to $10, right? Why is your target 0.68? Because that's where the sell side liquidity gets swept. So do you see the difference in price? I want you to see the difference in price behavior between this right here right there and then here. So what happened in this move up? You can see a really nice structured move up, but this is the importance. It's a structured move up, leaving two high time frame demand zones behind. So you can see right there, this is high time frame structure demand, validated by this imbalance on the chart right there. So this imbalance creates this high time frame structure demand with also this lower time frame structure demand in the upper section of the block. Ever since that, price has been curling up. You can see this curve. I can connect these curves to these lows. You have this low right there, that low right there, that low right there. Let's adjust this to here. So you can see that on a higher time frame, you have a higher low, a higher low, a higher low, a higher low, a higher low. These are your primary lows. These are your main lows from your market structure pool, okay? Your swing market structure. Retail and non-smart money concept traders, they will look at this and see like, oh my God, this is an uptrend. And indeed, it is an uptrend, but it's an uptrend that gets exhausted because you cannot continue a normal uptrend like this forever because the retail catches on and tries to trade the higher low for the higher high. But what's actually been going on is you've been grabbing buy-side liquidity, grabbing buy-side liquidity, grabbing buy-side, leaving sell-side. So then the moment you shift that structure, you're in for a reversal back down. However, you don't only have your primary lows building up. So these tabs right here are your primary lows right there. You also have your, let me actually this one right there. So these are your primary lows building up, which are your main market structure lows. But internally speaking, inside of these 2 points, you also have all these lows building up right there. These may not be market structure lows, but these are just lows of candles. They're simply just lows of candles building up. So you can see lows building up right there, and you can see lows building up right there. And you don't have it really that in here because that's a pretty V-shape move, but you're seeing all this liquidity build up, and now you're building even more liquidity here. And this was kind of like the only demand zone in that entire liquidity kind of like scheme, and that's what we're currently bouncing from, where we got that local trigger. So that's why I was like, man, if you catch the short from there, which unfortunately I didn't get the confirmations, you could have a massive runner. But even if you don't have the runner, guys, like I'm talking about a potential 50 RR setup just because you can. But it's a guaranteed 5 to 10% net gain. Guys, a guaranteed 5 to 10% net gain on your account balance. That is your monthly profit goal. If you want to make millions in a few years of trading, if you can make 10% a month consistently, you will make millions. Okay? So there are going to be plenty of opportunities where you do actually get this retest. Because we have traded those in the past all live, all publicly, especially the Sui one, right? So I'm just showcasing you that these patterns are repeating and repeating and repeating. And when you can understand this liquidity game, because it's simply a liquidity game, especially crypto is a liquidity game, you're going to be trading the right models and you're going to be having amazing results. But circling back to the correlation with Bitcoin, I was expecting Bitcoin to reach resistance and reject. So just by Bitcoin coming into supply, I don't need a confirmation for Bitcoin to take Farcoin. I just need Bitcoin to reach some sort of supply while this is giving me that high probability distribution. And then you can take this trade all the way back down to here. Personally, I'll just take a profit here, right here. Take a profit right there. Lock in 3 to 4%. Put the stop loss to entry. And then target lower. Really, target lower. But this right here, guys, if you study actually my provided content, every one of you should have seen this exhaustion. Because it was this pattern right here is the exact pattern how I literally nailed the exact all-time high on Sui. Yeah, Sui is like, we smashed the bottom and the top on Sui. But it was the exact same on Sui. I want you to go to my X profile after this stream and type in Sui as a search button. You will find a tweet of me right here saying Sui is going to go to 2.8. That's the tweet. $2.8 incoming when we were back at 5.4 or 5.3. And that's literally because, again, you had that expansion just like on Farcoin. And then from there, you were building up all these lows, taking the highs over and over and over again. And then you got the distribution model. And then you got the break of structure. And then you got the move back down. But then guess what? The move back down into demand was leaving all this liquidity below. And we were now changing the liquidity game from, instead of taking the highs, building the lows, we were taking the lows, building the highs. And then guess what? We longed it back up and we're still in that long. And I'm still targeting a potential new all-time high if we get some sort of an accumulation model here, which could be a very good re-entry if we are intended to take all that buy side. But it's just a liquidity game. Also, the TCT models, they're built around liquidity. Wyckoff is built around liquidity. These deviations aren't just taps and just deviations. They indicate liquidity grabs. That's why I hate it when I see people drawing Wyckoff patterns where a Wyckoff model 2 is you have a range high, you take that high, you go back lower, and you get a lower high. This is a model 2, right? A 1, a 2, and a 3. And then you will see people draw these taps of Wyckoff when the second high doesn't even take out the third high. They'll do something like this. 1, 2, 3. That makes me sad. Okay, that makes me sad. But yeah, that's basically the whole part of Wyckoff. It's a change in liquidity in the market. And that's what I was seeing on Farcoin, simply. So we're already getting a pretty hefty rejection, you know. I think from here to here, what's this, like 60%? Oh my god, yeah, crazy. Now from there, anything can happen. Okay, you don't really have high time frame structure backing you up like you had on Sui, but anything can happen. But yeah, that I see a way that we can come down to here. That's what I would want. If I'm looking for swing longs, I'm looking for this region right here. Obviously, you can trade this model on an intraday basis where you get the setups that we just talked about right there that can net you all those results. Because if we have to be honest here, like we do see also some buy side liquidity above. Like look at all these highs, right? High, 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 super, like a lot of highs right there. So you're definitely showing signs of exhaustion. Breaking structure also back to bullish on a lower time frame right here. So you could definitely get a relief move up, for example. But the play is already complete. Like whether you take this liquidity or not, your money has already been made. Let's say you got that pullback right there. Boom, profits are cashed. You leave a position open, stop loss to break even, and you're done. Okay. But yeah, really note down that high time frame expectation on Bitcoin that I have, because I have if we get the right price behavior coming into these lower levels here, I am really confident in my market maker manipulation playbook actually completing itself from like exactly how we talked about it over 3 months ago, you know, which is, that's crazy to think about. That's making me proud. That's impressing me. Okay, that's impressing myself. And we also talked about the volume profile for the people that forgot. You know, you have that gap right there. Let me get rid of this. You have that volume gap in here. So if you can start ranging, you can be filling up that gap. And while you're filling up that gap, you're creating more volume in the upper section of this macro range. So you have this macro range. If you decide to go down and create some sort of an accumulation model in here, the volume at that specific price point will increase, and your volume will look something like this, for example. Let's say it looks something like that. And then you go back lower, just like this. So this is what your volume would look like. But because you're increasing your volume in this region, your volume area low can be shifting up because there's more volume in the upper section, and it's basically a calculation of the average volume over the range. So this volume area low could be shifting up, and then guess what? If this volume area low shifts up, what happens down here, guys? What happens down here when your volume profile shifts up? You are creating a massive inefficiency. You are creating a massive inefficiency where all the price action is in the premium section of this macro range. And what does that indicate? If there's little to no volume here with only sell side liquidity and price comes back up and you get your third tap confirmations, it's going to be a fairly easy move because there's nothing here to hold price up. Okay? You got some demand probably at this like 89K-ish region. But besides that, of like a temporary bounce, you can expect a pretty easy fill once you decide to fill it. So I've just traded this, guys. I'm speaking purely from experience now. I've traded this so many times on every time frame that like I just know if it plays out, right? I'll see it in the moment. But like all this pre-planning, don't think that you have to do this pre-planning. I've just seen it so many times. That's why I'm like, that my mind goes immediately to all these scenarios of like range development, which is like what I trade for fucking. I've seen every single candle on Bitcoin. I've backtested the way I trade on like the entire history of this chart. And I'm not even joking. Literally the entire history of this chart. So I know Bitcoin. I just know it. I know how it moves. I know how it behaves. So if I get what I want to see, I'll definitely be updating it on my socials. And you better got the alerts ready. I'm checking the chat right now. So if you have any questions to me, ask them now in the chat. I'm scrolling back for a second here. Frecuencia, crazy to see how your plan is being written in front of our eyes. Yeah, man, it's pretty fucking insane. Can you go over why TRX did not work? Oh yeah, great. I want to circle back to that as well. Guys, TRX was a pain in the ass, respectfully. Right here. So yesterday, we were almost hitting the take profit target. And I really want to showcase this because it happens to the best of us, right? Where we were mitigating this extreme supply. And then we were coming down. Right there, we were coming down. And then we just pumped back up. But here's the good thing, guys. Here's the good thing. Let me take you with me into the server. Okay. Crypto updates. Boom. Here. So, at 12:30 at midnight, I said I have also trilled my stop loss to break even on TRX. So you can see the short on TRX right there at that high. Entry is at 0.27693. And then I trilled my stop loss to 0.27692. So just a bit before the actual entry point to calculate for fees. And then you can see I have trilled my stop loss to break even, which is when price was at that low. And then that was at 12:37. Then I headed to bed, and then I woke up seeing this happen, which happened at 1:16 in the morning. Okay, so we simply got a high probability model 2 distribution in high probability context. Unfortunately, it just did not hit the target. And guess what? I will never claim that TCT is a 100% win rate strategy, because it simply is not. But when you can apply proper trade management in a way that even when you are wrong, you either not lose money, but most of the time can make money by trailing your stop loss, you are in such a good position, guys. Like, my initial idea, like, it could go over the Model 1, but it's simply not my entry style, okay? It's simply not my entry style, but could go over the Model 1 and still complete the move right there. It would be typical TRX. I think if TRX is a Model 1 and completes this all the way down, this might actually have to do with the fact that I was pushing TRX. Like, that is skeptical. I'm not gonna lie, guys. I would be very curious if this happened, if we were publicly posting TRX. That's suspicious. Okay. However, my initial idea was wrong, but I still made money, or at least did not lose any money. If I include my break-even trades into winning trades, I am most of the time trading with an 80 to 85% win rate. If I trade and include my break-even trades as winners, I'm trading close to 80-85%. On crypto, I'm trading close to 80-85% win rate. On these models, with the right duration and a high probability context, easily. Without them, you can say 60 to 70 if you don't include break-even trades, but purely only winning trades. But yeah, that's the key, guys. You don't have to always be right. And I could also not tell you, coming back to the question, what could you have done better if you took the trade where you should have taken it and you had your first TP right here and you trailed your stop loss to break even or above that high when we were coming down here, and you got stopped at break even, you did everything correct. An individual trade, guys, is not going to make you rich. I want to make that very clear. An individual trade is not going to make you rich. Having the right trading habits is what makes you rich over the long run, okay? So don't be bothered with what could I have done better? Nothing. If you did what I just said, you did everything right. Now, if you wanted to, this could be a re-entry, but I'm not taking it because it's simply not my style. But it's simply a Model 1, and then you're trading kind of like the test of it, the lower high right there. But I'm not in that position, okay? I'm not in that position. It would be crazy to still see it play out, though. I still like to go lower. The context did not change. It's just that the initial entry point got taken out. And how I throw my stop losses is not something I can explain right now with the limited time that we have. But there are plenty of videos on it in the live stream clip channel in the Discord. And let me check. Mr. Chow Souza, what do you recommend for psychology for trading? My setup is right, but I have too much execution problems. It started after I lost a huge amount of my portfolio in a copy trade of a guy. Oof, that is that's tough. But the best advice that I could give you is by first watching videos on YouTube of Mark Douglas. Okay, if you watch Mark Douglas, I think a lot of new things will enter your mind again. So Mark Douglas, he has an interview on YouTube. Go watch that. He also has a book, Trader in the Zone. Another great book is Mental Game of Trading from Jared Tendler. And I think if you watch that interview of Mark Douglas, that changed a lot for me. That really opened my eyes. So start with that, and then you can already apply different mindsets. Now you can start trading, start journaling your setups, reflect back on your journal to see what you could have done better. And then you can, if you're still struggling, I would then go for Jared Tendler, The Mental Game of Trading, because he gives you active approaches on how to fix it. But these guys are better than me at the psychology. Like, they're professionals regarding it, you know? I can only tell you my experience. Rex Wilson, around 80, 900K downside. And then from there, we push up all time again. What's your target, Lars? Oh, I think you mean 80 to 90K for Bitcoin price target. You're like 900K? I was like, yeah, so somewhere in this region, brother. Somewhere in this region. So that, for me, that would be, no, 80 to 90 would be too low. No 80 to 90. No. Up here, around the equilibrium. So I would say like 98 towards 95, preferably. Can you cover Doge? I can check that. How much were the funding fees? Bro, I made a fuck ton of money on funding fees. Now, it's not like a lot of money, but I made like $100 on funding for doing nothing, for holding this trade. I literally wrote a message about that, but I held this trade for 8 days, made like $100 in funding, which is pretty damn crazy. Pretty damn crazy. Let me check. Why is a Model 1 not your style here? It's because of the, like, if you want to give it a shot, you can, like, the entry already happened. Like, if you want to give this a shot, there's no way you can enter on the breakup structure. First, the return to zone is messed up. Like, here we have a beautiful return to zone. But that's gone because you have like one pump candle. But if you feel like that could be a fake pump and you could have a 1, 2, and 3, where again the time displacement is also messed up, you're entering right here. You should be entering right there on the bearish breakup structure. That would be your entry. Let's take a look at Ape. Entry's already gone on that one, yes sir. And it's a mid as fuck model. Welcome, GG's. Okay, let me check Doge. Let me check Doge. Yeah, so Doge also had a rough time yesterday. Like, the thing with Doge is, the problem I was facing with Doge is that you got this bullish breakup structure, but you never really had a proper accumulation model down here. So when we were longing Sui did something like this, you know, and that's where we got that long. But Doge never did that. And XRP is still in that same range. So this range is the same range on XRP, okay? Right here, where we are looking for a potential swing long. Here. Oh, let me go this one, by the way. Yeah. That's just something extra. But where we are looking for a swing long, like this low right here, that was all the beginning of April. That still stands, okay? The beginning of April was right here. So this XRP range that we're currently still in was this range right here on Doge. And that was the same range on Sui, but only Sui really came back for that proper third tap. And Doge just went up. Now, we did break structure back to bullish, but the only true demand POI that I had was this demand right here. Like, that was truly the only demand that was, and it was pretty significant, right? It was a good looking structure demand POI, but we just absolutely smashed through it. And now it may surprise you, but I think there is an opportunity for Doge to make its way back down to here. I know that's a pretty aggressive drop. I'm like surprised by it myself as well when I talk about it, but like you did miss some high time frame demand down there, and you front ran that, and you never had the proper accumulation model because you never got the proper third tap, and the demand POI that I was watching never gave any type of bounce. So this could just be on like a high time frame. This could simply be a low right here, a low, a lower high for a lower low to then get that high time frame accumulation model in here, and maybe that causes that rotation back up to maybe that causes literally an accumulation model right here with your 1, with your 2, and then eventually with your 3 to then really start squeezing up aggressively. I think that could be a situation where this was just a fake break. Price wants to go lower, mitigate this high time frame demand down there, and then get your high time frame accumulation in this range. That then it does have the chance to go back to a new all-time high. That could literally be the case. If you could break your high time frame, let's say you accumulate down here, and you get your 1, you get your 2, you get your 3. Then if you can break your range high just by following high time frame structure, this is a high time frame breaker structure. So that is your level 1, okay? That is your level 1, just like this, which could deliver a higher low for a potential higher high. And that gets confirmed if you can break that level 2, okay? Or in the mentorship, I talk about this as, you know, the domino effect, combining high time frame, mid time frame, low time frame structure. And bro, that would be pretty insane if we can shorted the all-time high, not the all-time high, but like the high of this cycle. Let's see if we can maybe long it to like the local low here of the same kind of like market structure point. But this, in my opinion, would fix a lot of charts. Okay, this would fix a lot of charts, getting that 30% correction, like 25 to 30%. It would fix a lot of altcoins. So I already made a post. Identify pairs that have demand levels, you know, 25 to 30% lower, and see if you can get some high time frame models. Okay. Yeah. It's just that I don't really have anything in here, guys. You know, so for me, it was like, okay, market structure is king. So you do have a break. So we have to respect that break. But then when you completely disrespect that demand, then this actually seems pretty likely. Okay. I wish, guys, I could chart all your requests. But that's why you just gotta be in the Discord. Because I don't have the time for it outside. Like, all these charts are already pre-planned, though. I can show you my TA real quick. Let me delete this. Boom. This is what I had. So, this is basically all the data you need, right? You got this low right there. Locally, you have these triple lows. You can see my magnet. I'm expecting price to eventually make its way back down to those triple lows. So like I just said, on Bitcoin, what was the expectation on Bitcoin, guys? A move back up there, consolidation, distribution to revisit that low. So we're looking for shorts as well on high probability distribution models to take down towards these liquidity targets. Okay? That's my main order flow objective. And guys, we have now gone live back to back to back to back. I've done 3 live streams every single day this week, which is mentally exhausting. But I hope I could have just showed you that if you can just build the right context and then look for the right models, you can actively nail these markets and actively compound these monthly profit goals and actively work towards your future. And not hope and round trip your gains every single time thinking that a 50x meme coin is gonna cut it, because it's not. It's not. But you can get better returns by actively trading these markets, and you've seen the accuracy that is achievable. Like, there's like trading, it can change your life. It's hard. It's not easy. It's not easy, but it shouldn't be easy. Otherwise, it's not rewarding. It needs to be hard. That's why it's rewarding. Okay? But I just hope I could have showed you all that is possible when you're actively trading these markets, while also then having someone like me in your corner guiding you through these markets on a daily basis, making sure that in the beginning you have the right context and you have the right POIs and you're trading the right models. So while you are learning and while you are trying to understand so you can do it yourself, you can already actively take the right trades. I don't want to be a signal provider. Yes, I share my trades live, but it's for you to learn in a live trading environment, for you to apply these concepts in a live trading environment so you can see it work with your own eyes. It's usually, guys, if you just try it for a month, you will never want to go back. Literally, you will never want to go back. Once you take that trade and you're like, oh man, I just made 5% in a single trade. Bro, you're gonna pull out your calculator and you're gonna start fucking calculating how much you will be up 2 years from now. You're gonna be looking at Lamborghinis, and then you're gonna discover that's a bit harder than you might initially think, and you kind of have like that beginner boost. But it's worth it in the end, guys. My life is so amazing right now, and it was just like 5 years of sacrifice, you know. And it doesn't have to be 5 years for you. I went down the whole traditional route with the indicators and all that stuff. I'm teaching you literally exactly how I trade. Exactly how I trade. No cryptic, hidden, secret informations with code language. I'm actively explaining every single detail about the model for you to understand. Okay, so I hope to see you guys all in the Discord. And that's where I'll be located. I don't know about my public live stream schedule next week. I probably won't be going live that much, but you'll still be hearing from me, obviously, on X. And I love every single one of you. The fact you're listening to me right now on an 11 p.m. on a Friday is already says enough about your character. Okay? So I love you guys. And I'm going to see you all Monday. I got another video coming though tonight for the VIP, because we have some important things to discuss about these 25 to 30% drops. So keep an eye on my channel for tonight, and then besides that, I'm gonna see you all Monday. Okay, peace out, guys.